JB here, JB here. Hope everyone's doing outstanding. Monday, October 20th, 8:54 a.m. on this fine morning talk. Quick about the marks, some names I'm looking at go from there. S&P futures up about 0.4% here. No Black Monday, right? October, there's always that time frame where every Monday is the possibility of some kind of Black Monday event. Joking aside, sarcasm aside, um, marked safe from Black Monday. Anyway, I'll talk quick about the market. Some names I'll look at go from there. S&P. Well, this week we have finally we have some data. So the government shutdown, which is in its 20th day, hopefully, which comes to an end sometime this week. We finally have some data at the end of the week. We'll get CPI data. That's ahead of the Fed meeting, which is the following Wednesday. We have earnings season, so we have Netflix tomorrow, Tesla, Tesla on Wednesday, Intel on Thursday. And then outside of that, just kind of more headlines. And I put on the watch list this morning. It's kind of disappointing to see kind of that government shutdown, which was stealing headlines the previous weeks, is kind of like moved to the back pages of the newspaper, where I would like to see it in front page so it gets resolved. And I think that's kind of like a sign that hopefully it gets resolved here soon. Also this week you have Bessent talking to his counterpart in China. So I think they're in Malaysia doing some trade talk. Hopefully, we get some positive headlines there, and we can move past the cooking oil and soybean tweets that we've been seeing that have moved markets. So that's kind of the overall market. On the SPY, unfortunately, the last 6 sessions, wide swings, right? In the market, the SPY, you take a look, it's nearing its 50-day moving average. So 653.63 is the 50-day moving average. The good thing about the last 6 sessions, and I try and take the good and the bad, is that we found some defined areas of support and resistance. So 653 on the SPY, we hit that a couple times. 658. Those are the two key spots on the downside. On the flip side, upper Bollinger Band. So if we do find some buyers, and we're gapping higher here this morning, and markets find some footing, 674 this week is kind of that range. So hopefully we won't go down and test those support areas this week. But if we do, at least we have some defined ranges to kind of look for put hedges on breaks below. So that's kind of the overall markets. A nice little chart here. This is from the Wall Street Journal this morning, showing the previous strong stretches of 6-month rallies since 2000. We are in the third best performing stretch. Obviously, the great financial crisis. So you have September 2009. So that was from March. Obama called the bottom in March. And then we have the other one, which is the COVID induced reversal, massive reversal. So outside of that, this is the third biggest 6-month stretch of rallies since 2000. So good stuff. All right. So that's quick on overall markets. So individual names. First, actually, I guess I'll talk about SanDisk first. Do I have that? Yeah. So just quick on SanDisk, right? So that's a name I've been watching. I'm creating pardon my French, shit basket. Names that possibly can get destroyed on some kind of pullback in regards to the circle jerk and AI capex and supposed AI bubble, excuse me. So you take a look at a name like SanDisk. It was $40 stock back in September. And you know what? After doing more research over the weekend, it's a spinoff. I didn't realize Western Digital took them private back in 2016 for like 19 billion, right? And then they just recently spun them back off as part of their hard drive or whatever storage spinoff. So I didn't realize that happened. So that was back in February. So it's a name still, I wouldn't say it's an IPO or whatever, but a spinoff. So I guess it was Price Discovery as the name traded into the spring and then early summer. And then it got kind of like a sympathy move as people, you saw the Microns and some of these other names, the Seagates, the Western Digitals going bonkers on, the AI CapEx story, right? So you see it up, and the reason it's got it garnered attention is because of its rally. And you look, it's up 300% since the start of the year. But then you start digging through, and it's like it trades 3 times revenue. So it does $7-8 billion in revenues, a $20 billion company. Decent growth rate, like 10% growth rate. And then you start looking at its competitors, and Micron trades 7-8 times revenue. So I put on the watch. It's not an apples to apples comparison, but you can, do I think at some point it has some crazy pull? Definitely, right? So I'll be looking on both sides, but then on the flip side, you start looking, I'm like, maybe this is a name that goes 200, 250, parabolic. So using that premise, I was looking for call plays at the end of the day on Friday, went and got those spec calls this week. They report earnings November 6th. So I don't know if I'm going to try and trade the earnings. We'll see. But if I can, it's gapping up $8 here in the pre-market. So my call is going to be up a couple 100%. I would assume at least 100%. So probably the plan here, lock some in to cover costs. If I can get some out, cover costs with some profits, I might roll out past the November 6th expiration to play for earnings. And then, that's kind of the thought process there. Can this thing drop back under $100 in the coming weeks? It probably does at some point, right? But I think the probability of some kind of FOMO move or continued FOMO, because I mean it's up 300% in 2025. Hard to say that a stock up that much is going to have some FOMO, but you start looking at the backstory. I'm like, this has the possibility of going $200. So that's the rationale there. Thankful it's gapping here this morning. Fingers crossed, 30 minutes to the open. It holds that, locks him in cover cost. Now I'm riding free, stress free. And that's the plan there on SanDisk. So that's SanDisk. I don't know why I don't have the other charts here on Oracle. But hey, all right. So then on to other names. So, I'm doing the rant Friday afternoon and I'm looking at SERV Robotics and, it was only down 4% last week. When I say only in the context of it was at 1850, right? 1864. So disappointing last couple sessions of last week for SERV Robotics. But to me, the story hasn't changed. It just continues to be one of those divisive names that's still getting, figuring out supports resistance. And I think at some point this starts to revisit its January highs of 2375. So with that being the case, I'm trying to figure out, do I add some more strikes into the weekend? Do I not? So I went and got some more November strikes, lower calls. Story hasn't changed here. So I'll continue to lock some on the way up. And you know what? I think the plan going forward is that once it has those swings and pulls, I'll look to add on dips too. So that's SERV Robotics, gapping here at 15 this morning. As long, to me, when I look at it, I'm like, it's hard for me to get a scenario where I think it breaks under 1375. So if that's the case, might as well dip my toes in more calls. So that's SERV Robotics. Other names reporting earnings this week. Intuitive Surgical reports tomorrow after the close. It's $100 off its, I think it was 575 back in May. So, if you know the story back in the day, it was one of my top 5 stocks. I think back in 2013. I can go back in the day in 2013 when like people, some of these perma bears like Herb Greenberg, who used to be on CNBC, bashing Intuitive Surgical because it was robotic surgery. There was all these reports that they would do surgeries and organs would fall out of people's. It was like crazy stories. I would have to find those from back in the day. But anyway, needless to say, it's become one of the most fundamentally strong stories out there. I mean, I think it generates now $1.3 billion in free cash flow on a yearly basis. It has no debt, $5 billion in cash, a decent growth rate as well. And it's in that theme of robotics, right? So the kind of I guess some of the headwind would be that there's competitors in the space now. Johnson & Johnson's been trying to roll out their own robotic surgery, I guess, solution for a long time now. And that's always been somewhat the overhang for Intuitive Surgical, but it's been hanging in there. And to me, I'm trying to look for the catalyst for this $100 drop since May. And it did back in April with the tariff liberation day scenario, bounced all the way back up to 570, and then it dropped again. So I don't know if there's something more to this story that I'm missing. But to me, when I see a drop like this, I think there's opportunity. Their earnings tomorrow after the close, premiums are expensive. So for me to try and find a decent risk reward strike, it's tough. I'm looking at the 500s, maybe the 520s. So I might add some calls here at the open, look for some premium build into today and then tomorrow. And then if I can get some to cover cost, I will, and ride freebies into earnings. If not, I'll close them out and revisit. But that's the story on Intuitive Surgical. Love the company. I was also looking at like their guidance is still 10 to 13% revenue growth for this year. So all right, so that's Intuitive Surgical. Considering, and I do have it here. Netflix reports after the close tomorrow too. I think it's like an 8% implied move. You have to think there's going to be some little impact in regards to their subscribers based on what happened with Elon Musk. I've been calling me crazy, but it's one of those. I wouldn't say it's the name priced for perfection, but there is an opportunity, a risk here that maybe there's some kind of a misstep. We'll have to see. I don't think it'll be enough or material enough for the stock to drop. With that being the case, I mean, Roku is a name I've been trying to trade for sympathy moves on Netflix earnings for quite some time now. And it's a name I've stayed away since its summer earnings. And of course, it's down in the 70s, 80s, boom, all the way up to 170. 107. I wish maybe someday for Roku's $170. At the start of October, it's dipped like $15. So do I think there's an opportunity here to play for earnings or into its earnings? And I think the report October 30th. A little tough. If you look at the strikes for next week on Roku, it reports on a Thursday, option expiration is a Friday, and the premiums are tough all the way up to 120. So to me, I might look for some spec calls today. And it was 95 here in the pre-market. But it's a name I haven't traded in a couple months. Look, I might dip my toes back in the water here. Also, it's 50-day moving average sitting there right at 95.74. So it gets over that today. It's just sitting here 95.40 in pre-market. Might be off to the races. So that's Roku. Just quick on some other names, right? Oracle, Thursday afternoon, I get those calls. I had into its analyst day where I thought the stock maybe should have reacted more positively than it did, trading around 317. Then overnight, I mean, it's trading at 304 in the pre-market and overnight, like 304, 305. And then it just tumbles right at the open, breaks 300 all the way down to 297. No news, no catalyst. Still closed down 6% on the day. I was able to close some of those lotto puts out for 300% and 200%. And I nibbled in some others on Friday. I continue to think that if when this AI situation plays out to comes to an end or whatever you want to call it, I call it the great circle jerk. There's names to look at as possible signals or cues, and I'm not 100% sure that Oracle will be the one, but it's definitely a name I continue to watch. Opportunities on both sides, and I look at Oracle. I'm like, this could trade back up to 345 from its post earnings level. So that was kind of what I was looking at last week on its analyst AI World and Analyst Day. But now I look on the flip side. So don't be surprised if I trade lotto calls or lotto puts, depending on breaks of support and resistance. But certainly a name I'll continue to look for opportunities. It's been a couple times I've traded has been some nice 100% plus moves, and then I've nibbled a couple times that didn't work out. But I think it continue to offer opportunities. Which brings me to Reddit here. Of course, Reddit's over $200 here in the pre-market. I was down 2% yesterday, Friday, excuse me, finally broke that channel to the downside. So have to watch here today. Maybe if it holds, it could be a good sign here. Let's see if I can pull up that chart. But I don't want to chase here at the open. Unfortunately, I'm watching. I'm like, oh, come on, hold up. So it's in here at 201. I'll continue to look for that one. I think at some point it's going to have a huge break. Same with JOBY here. I mean, JOBY frustrating. Every time it looked like it was going to break out, it seems like it was gapping in the morning and ran up. I think it was $18 Thursday, nearly $17 on Friday, and then a reverse course, gapping up again here this morning, 60 cents from 1566 close to 1626. Still watching that one for some lottos. Same with Duolingo. And then last but not least is that NKLR. And I don't know, don't have the chart here. The implied volatility has come out of the calls, which is good. So it creates opportunity. But then I'm starting looking at some of the strikes. If it finds a bid and it starts getting some FOMO action, maybe over $15 to 25s look interesting again. And they're only November strikes. They're only monthly. So kind of doesn't have the same risk reward it did when I was trading what you would call them weekly options, because the October expiration was last Friday. But could be another one of those names that had some profit taking and then gets FOMO. So be watching that one. I think that's it. Fed meeting next week, and yeah, hopefully some tighter trading ranges here on the SPY this week. Let's have a great day. I'll be back. Rock and roll.